We've seen an improvement in market sentiment over the past couple of days, and with this, we've seen an increase for some of the share markets around the world. We've also seen some more interest in currency markets, with the New Zealand dollar responding positively over the past few days. Of course, last week, the Kiwi was trading at some of the lowest levels it's been for over the past 5 weeks, and at that point in time, we were trading as low as 74.60 against the US dollar. But on Monday morning, with the improvement in market sentiment, the Kiwi has lifted, and we're currently trading around 76.15 against the US. The other factor to consider right now is, of course, interest rate markets, and interest rates are at considerably low levels for the time being. We are picking that the Reserve Bank of New Zealand will keep the official cash rate unchanged at 2.5% right through until about this time next year. So this will mean that short-term fixed rates in particular are likely to stay a bit lower for longer than what we were previously thinking, and farmers are going to enjoy the positive benefits of this. The slightly lower level for the New Zealand dollar is also going to provide some benefits to New Zealand beef farmers. Of course, when the Kiwi dollar was trading in the mid-80s, this was going to cause some problems for schedules for the current season. But now that the New Zealand dollar has drifted lower and likely to stay in the mid-70s for the time being, this will provide some nice benefits to local farmers. The other factor to consider is that imported beef prices in the US are also looking pretty strong. Manufacturing beef prices, in fact, are currently only a couple of cents shy of their all-time high levels, and this will mean that scheduled prices should be underpinned. Looking through to next season, prices are looking fairly strong, and it could even increase as the season goes on. I'm also feeling positive about the medium-term prospects for the beef industry, considering that the US market is tight of supplies and also their herd has shrunk. This is going to mean that they aren't going to be able to lift supplies in the interim and over the next couple of years at a time when demand may start to pick up.